Well, today is going to be a different video for a lot of obvious reasons, as you guys can see. No sunglasses, and the weather here is like basically misting. There's so much fog in the air that it's like a mist coming down, and everything is actually wet. So this is kind of like the Bay Area's version of getting rain in the summer. So it's actually nice and cool out here though. Feels good. If the lens gets a little blurry, I'll try to wipe it off from time to time from the fog. But as if the cost of everything hasn't gone up enough lately, we are now contending with a new one, which is car insurance, guys. We've already seen car insurance rates go up a lot over the past couple of years. I even made a video complaining about it like 6 months ago. When I got a big increase, I cut a bunch of my coverage off to actually get my rate close to where it was before, and now it's starting to go back up again. But a lot of other people are starting to feel that same pain, because car insurance rates are surging by up to 50% in different parts of the country right now. Right here in California, where I'm walking, is one of them. Here's the funny thing. A lot of people were predicting that homeowners insurance was going to get cheaper this year, not more expensive, but already in 2024, the average increase has already been a 15% price hike. But if we look at a report from Insurify, according to their records, car insurance has been steadily increasing since 2021, and the estimated average cost is expected to rise to almost $2,500 by the end of the year, guys, for car insurance. Okay? I mean, I remember when I used to pay, let's see, I was probably paying $1,000 a year for car insurance, maybe 10, 12 years ago. Now I pay probably pretty close to this amount. Now I'm paying right around $2,200 a year, $2,300 a year. So it's getting pretty close to this new $2,500 average that everyone's just gonna have to get used to. So according to Insurify, they say that California, Missouri, and Minnesota are gonna see their car insurance rates jump the most this year, up to 50% in some cases. And according to Insurify, they say that damage from severe storms, weather events such as wildfires could contribute to rising rates in the states, along with state laws about insurance coverage. There's also been some new laws passed recently in states like Maryland and South Carolina that increases the insurance company's financial responsibility, and those changes basically contribute to higher insurance premiums for drivers. So it's like all these costs always get passed on to you. It's not like these insurance companies are doing us a favor by giving us insurance, guys. Especially whenever you go to make a claim, you'll see how much of a favor they're really doing you most of the time. Just for the average person, even if you don't live in one of these states that are going to get hit really hard from this, you can expect your car insurance to go up this year about 24% by the end of the year. And I would say I've already seen some of that increase, because my renewals are always in June and in December, and I pay the full 6 months up front. That's how you get the best deal. If you're not making monthly payments, you save a few $100s off of the 6-month premium. But even with that savings, the price still continues to go up. And it's like, when is it ever going to end? And that's with coverages being dropped, guys. I can't even imagine what my car insurance would be now if I never dropped coverages last year, because it literally skyrocketed. It went from like $1,200 for a 6-month period up to like $1,700. And then after a bunch of finagling, I was able to get it down to around the $1,000 mark, but now it's already back up to like the $1,200 to $1,300 mark with the increased deductibles, with the lower coverage amounts, and no accidents. But you can also thank inflation for this big increase in car insurance costs, because the reality is car insurance companies have to pay higher prices for car repairs. So every time there's an accident, now they're paying higher labor costs, they're paying higher material costs. That all adds up, guys, and that's something that's out of everyone's control, including the insurance companies. So it's not like they're the only ones to blame here, but people need to understand that these increases on everything that we've seen, including car insurance, are permanent. You know, a lot of people think that somehow this is going to get reversed when the next president comes into office, or some sort of, financial or economic miracle is going to happen because of that. And I hate to be the one to break it to you, but that's not going to happen. You know, the damage done by inflation is permanent and is still continuing to ravage us. Now it's going to be car insurance. You know, what's next? You know, we've seen other things cool down. We've seen, you know, the cost of groceries kind of level out recently. We've seen some gas prices come down a little bit, but it hasn't been enough to save the average person enough money to really feel good about their finances or feel like you're finally getting ahead again. No. You know, even the car companies are feeling this too. There was actually a story today that talks about what I've been talking about a lot on how rich people cannot support the entire economy, guys. They just can't. You know, even though rich people, the top 10% of earners in this country, support 40% of the spending, that's not enough to have a healthy economy and keep things going. And car companies now are actually feeling the squeeze from this. Basically, car companies are running out of rich people to sell their big expensive cars to. And of course, you wouldn't know that by walking around an area like this. I mean, you can't look at where I'm walking and say, well, that's not true, Michael, because here where I'm walking is an anomaly. This is where the top 10% live. You know what I'm saying? So right now, the average price for a brand new car, according to Kelley Blue Book, is $48,400. A lot of these car companies rely on selling these big, expensive cars. Those are the most profitable. That's how they make the most money. That's why you see all these car companies have, you know, $60,000 Jeeps. They have $80,000 pickup trucks. They have $45,000 sedans. But the car sales, the cars that have actually been selling, have been shifting more towards the affordable segment, which is showing these companies that, hey, this is what people want right now. The demand is for the cheap cars. This is why the US government doesn't want to allow the Chinese EV makers to sell cars here, because they would absolutely decimate American car makers because they sell them for so cheap. But it would almost be no contest. I mean, people would be stupid enough to go for that because you're buying an inferior product in most cases, you know, a Chinese made car by new companies that don't have a lot of experience making cars, so the quality control is not there. There's a lot of problems with them, but people who are desperate financially would fall for this and go ahead and buy those cars. But the most popular type of vehicle being sold in this country are small and mid-sized SUVs. Literally 25% of the vehicles sold is a small or mid-sized SUV, and they sell between $30,000 and $36,000. So not too bad for a brand new car. But the reality is, guys, even people are having a hard time affording those prices, because according to a new report from Cars.com, they found out that new car demand is down 26% as of July 2024. And new car supply has also risen 45% in the same time frame. So that's a pretty bad combination and is going to lead to falling prices. That's the same sort of dynamic that's already leading to price drops in the housing market in different sectors across America. You know, places where you see inventory exploding and the demand disappearing simultaneously, that is the perfect recipe for price drops. So basically, the car market's on the verge of a deflationary price spiral, which means that people are kind of waiting this out because either they can't afford it or because they think prices are going to come down because the supply is building so much and they don't buy the cars, and that in itself forces the price of cars down. And for newsflash, anybody who wants to have a cheaper house, you're tired of all the home prices being so high, you need to do the same thing. Hold off, guys, especially if you're in a market where you see the inventory picking up. Just wait. The longer you wait it out and the more of everybody else around you does the same, then prices will come down because people will get desperate enough to start lowering the prices to where you feel comfortable buying. But for some reason, people don't treat buying real estate the same. You know, they treat it differently. That was an electric FedEx truck, by the way. I don't think I've ever seen one of those. I've seen the electric Amazon ones. Never FedEx, since we're talking about cars and all. You know, I've talked a lot about electric cars versus gas-powered cars on the channel before, but you guys let me know in the comments if you would buy one of the cheap Chinese electric cars. You know, if they come in here and they were able to start selling their cars for $15,000 less than the average Tesla, would you buy one? I actually saw an interesting video on CNBC the other day, and they had one of their reporters drive one, who drove a bunch of different electric cars compared to Teslas and all of this. And one thing that they mentioned is that the quality control for those cars just isn't there. The driving experience is not nearly as good. They focus more heavily on the technology side of things with AI and having your personal assistant in the car, things like that. But there's not a whole lot of thought and attention made to performance of the vehicle as well as the quality. Like things can feel very cheap and misplaced, like the lower, especially than the lower end models, the designs aren't very good, because you got to remember, these car companies are kind of new at this, right? They're not companies that have been around for a century. And even though Tesla is relatively new for an American automaker, they've still been around for a couple of decades already. So they've had some time to work out a lot of the kinks compared to these other companies that started yesterday. So would you buy one of those cars just because it's cheaper? That's what I want to know. I personally feel like it's a big shift, because not only are you going to be buying a car from a brand you've never heard of before, but you're also being forced to switch to electric at the same time. So those are two big shifts in one. So it'd be interesting to see if people would go for that or not. For anybody wondering, I'm walking around Paradise Cay. That's the name of the neighborhood here. They got a marina over here, and it's the same neighborhood that Robin Williams used to live in before he passed away. I actually shot one video here last year, and there's a bunch of streets here, so I'll do more videos here in the future. It's a cool spot. Next time I'll have to come out here and walk along this marina, because it looks like you can walk out here too. Now here's something really alarming that when I saw this, I knew I had to bring up here on the channel. And that is that almost half of people who retire at 65 nowadays could run out of money before they actually die. On the one hand, this is good news because it means people are living longer than they expect, right? But on the other hand, obviously, you don't want to be, 5-10 years away from being dead and have no money. This is research from a company called Morningstar Center for Retirement, and they're looking at things like healthcare costs and projected longevity to determine the sufficiency of people's retirement income. And what they found out is that people who are participating in an employer-sponsored defined contribution plan significantly lowers the risk of retirement shortfalls. Delaying when you retire and also working a little bit longer and delaying when you take Social Security can also help. And I'm actually surprised to hear this stat, but 69 million American workers, or 56% of the nation's workforce, actually does not have access to a retirement plan through their employer, which I thought almost every employer gave this. And I've been out of the employment loop for a long time. I haven't held a real actual job since I was 21 years old, guys. I mean, we're talking 2009 was the last time I actually worked for somebody else. So I learned a long time ago that I need to make my own retirement and all of this. So I'm kind of out of the loop on how many businesses offer this, but that's a shocking amount. And according to people's own personal opinions, 2/3 of Americans fear running out of money more than they fear death, okay? 58% worry about losing their independence, and 52% fear being a burden on family. Now, clearly those are all, major concerns, but I find it fascinating that people are more scared of running out of money than dying. In reality, being alive in today's world without money is scarier, especially when you see what happens to some people like that. According to the researchers, they say your best chance of not running out of money in retirement is to obviously have an employer that gives you a 401k, and then they say to make sure you're taking the maximum match, so you have to make the maximum contribution to get their match that the company offers. And then the most important part of it, those two are the obvious ones, is never touch it. Okay, and that's where most people are screwing it up today, because you have more people than ever that are borrowing from their 401ks to pay for life today. This is not news, guys. We've covered this several times over the past year of how much the hardship withdrawals have gone up, with how much taking loans against 401ks has gone up, and it's all because of how expensive life is today. And they actually say that baby boomers and Gen Xers actually have the highest risk of running out of money in retirement compared with millennials and Gen Zers. But they say that younger generations are starting earlier to save for retirement, and they're also benefiting from features like automatic enrollment, managed accounts, and target date funds. So they say, you know, people who are getting into the workforce today or over the past 10 years are going to be in much better shape in the future. Well, let's hope so. Could be the one advantage of being a broke millennial or Gen Zer today. Is you might be okay in retirement, but you're going to have to work a long time to ever feel good about things. Obviously, people borrowing from their retirement is a clear sign that people are desperate for money. But here's another one for you, okay? One of my viewers, Kippen, he wrote me an email because he is a numismatist. And in case anybody doesn't know what that is, it's basically just a fancy name for saying you're a coin collector. Especially numismatists look out for rare coins that you don't find often, because those are the coins that are worth a lot of money. And since it's a hobby of theirs, they're typically skilled in figuring out which coins those are and hunting them down. Well, Kippen, what he does is every year he pulls out new nickels and dimes from his pocket change from the Philly and Denver mints. And he noticed that he hasn't gotten any for 2024 yet. Well, it's already August. So he said he went over to the US Mint website to check on the mintages, and there are less than 1/10 of a normal year, even 2020, in the amount of mintages. And he says that it hasn't been this low, the amount of coins that they're producing, since when? Drum roll, 2009. He said there's only one other time frame this scenario occurred even more severely, which was in 1931 through 1933, which was when? Right after the Great Depression, or during the Great Depression, really. So what this means is people are redeeming their change heavily out of desperation, just like they did in 2009, and that the velocity of money is slowing down tremendously. And he says this is definitely a sign we are heading into a distinct and memorable recession, especially considering this has only happened 2 other times in US history, guys, and they were both during highly recessionary/depressionary times. It's no longer disputable. And I'm so glad that I have so many interesting people that watch my channel that can write me stories like this. This is something I would never have thought of on my own, right? But if you think about it, why does the government need to produce more coins if they have so many people turning them in at the banks? They don't, right? Those coins can go back out into circulation instead of staying in people's piggy banks at home. And to have the mint production down by 90% compared to last year, that is a tremendous difference, guys. And to me, the real proof that this is not good is the fact that it really was never this bad, other than 2009 and 1931. So those are clear markers in history of when we had a very bad economy and things were not great. So there's a story you'll probably never hear on the news. So I appreciate Kippen for sending this story over. And if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.